Hello, I'm Mario Toneguzzi with Business Spotlight. Joining me today is Tommy Baltzis, who is CEO of WhiteHaven. Thanks for joining us today, Tommy.
Pleasure, Mario. Thank you for having me.
All right, let's talk a little bit about WhiteHaven. Tell me what it is and what you guys do.
Sure. Let's just dive right in. I'll try to give you a little quick summary. So WhiteHaven has been around for 9.5 years, and one of the founders. The idea of WhiteHaven was to be a financial institution like any other financial institution you find out there, but with a little twist where we're looking at opportunities. So I had done a bit of analysis before I started the firm, and I kind of noticed that opportunities are kind of hard to find, and there's not many. A lot of in the past, companies would be going public, and that's where you'd find the opportunities. But with today's technology and organization of venture capital and all that, well, it's kind of hard. You got to be in a certain circle. So as an accountant, what I looked at is to see if there was a way that you can structure a long-term time horizon and an illiquid investment into an RSP, because technically, as an accountant, that's where people are investing, putting in some of their life savings into a registered plan, and it technically has a long-term time horizon and an illiquidity feature if you want, because normally you would not pull it out and you'd get taxed on it. And that's where we came up with the idea of having a diversified portfolio within, obviously, like everyone else does, but having some unique opportunities that can be available to pretty much anyone across Canada, subject to suitability and obviously regulation in that aspect of it. So our goal was to become a trusted organization over the years and across Canada to be able to bring these kind of opportunities. And lo and behold, here we are today, 9.5 years later.
So tell me, looking at some examples here, and one of the ones that I've come across with you guys is the Fashion Hero TV series. Tell me how that works as an example of an alternative investment.
Yeah, so basically the Fashion Hero was an investment opportunity. Well, actually, it was a company, an opportunity that came across, and we kind of dipped in to take a look at it. And we have I shouldn't say one rule, but we have a way of looking at things where we believe companies are created by people. And so what we try to do is look at entrepreneurs, look at individuals that we believe can make a difference or have a vision to be able to succeed, to achieve the milestones that they look at. And if you look at Caroline Bernier, who is the founder, who had this vision and inspired to do something different, this is how we came across, and we had a good discussion. And based on what we saw, we pulled it together with the lawyers and found a way to structure it to make it eligible to Canadians across the country. And Fashion Hero was born. There's no media funds. There's no government grants. There's nothing. Just pretty much people that like the vision that decided to put a bit of money starting from $500 and up. So some people are higher net worth individuals. Others have, but the opportunity is pretty much available to everyone. Doesn't mean everybody should take that opportunity, but based on their suitability and their liquidity and all their lifestyle, they're looking at putting at something a little different. And it's a perfect example because, like you mentioned, it came across the last month. We've had some fantastic news that Paramount Plus Canada took it over, and it's one of the top shows in Paramount right now. And in a period where with geopolitics and what's going on with China and Russia and Ukraine and the wars, it's an opportunity that has a idiosyncratic risk in it. So it's really on its own. So it's a good diversification into a portfolio. It's a TV show that you normally wouldn't be able to gain access to these kind of opportunities unless you're part of a network or you're a high net worth individual. And here, I think there's close to 2,000, 3,000 investors that have pooled their money together and have financed it. And the show is taking off. It's quite remarkable to think that this is an opportunity that doesn't have any high net worth individuals and is making a worldwide impact right now.
Fascinating. Yeah. Tommy, what are the benefits of alternative investments in a shaky economy?
So technically, I'm a CFA for those that don't know. So alternative investments are a great alternative to traditional asset classes. So what it does, it really has its own inherent risk to it. So when you get into traditional assets, be it mutual funds, be it ETFs, be it stocks, you're really trading on secondary market. And what happens is in the secondary market or public markets, when people say, well, it's markets are volatile and all that, is because not everybody around the world has the same objective. Some people are looking to move their money from another country to another country, so they're accepting any kind of price. So their first objective is not to make a return. So there's different kinds of objectives around the world. So it's very, very hard to predict. Now, long term, yes, the market is probably the best place to be based on historical information. But that's great for an institutional mindset where you're trying to do asset liability management. But when you're a retail client that you're like, I'm 35 years old, I still have a lot of 20 years. Is there anything I can do to really get into something a little different? So what alternative investments do is that they remove some volatility in your portfolio and they're focused on achieving a business objective, a milestone. For example, we have another fund called Trinity Hotels. It's very hard to get into a hotel business. A hotel, they don't really put up signs saying, hey, they're for sale. So you can have it flipped 4 times in the same year under different management. Well, we have an opportunity to say, listen, for capital preservation, a hotel is a great investment, be it a recession, be it good times, people travel. If it's a recession, business people tend to travel a little more to try to gain more business, try to gain more growth. When it's good times, well, more get to travel. So what the alternative investment does is that it gives you a different risk profile into your portfolio. But the big difference is that you can't get out tomorrow morning. For example, when you're buying a hotel, your money's being used to buy bricks. So if you want to get your money out tomorrow morning, well, it's kind of hard. Whereas if you're buying a share of Apple, well, there's another counterparty, and the market is made that way to create liquidity for individuals, but you don't know what kind of price. So that's what it is that we've structured things in a way to be able to offer these kind of opportunities. Doesn't mean you should be putting all your money into these kind of opportunities, but depending on your comfort level, your risk, what you understand, and what you want to do, there's some unique opportunities that are focused outside of real estate and private lending and financial services, because that's what Canada's economy has been focused on. I mean, everybody kind of has some sort of real estate. So we try to find different opportunities like the Fashion Hero, like examples like Watt by Watt and renewable energies, like Trinity Hotels and stuff like that. So it's pretty impressive historically if you gain access to these kind of opportunities in an early stage and wait until a material event happens or a liquidity event or an exit.
So it sounds to me like alternative investments are a great way to diversify your portfolio, reduce your risk if you're in the if you're an average Joe, or a savvy investor, right?
Yeah, so I mean, the risk is a relative term. The way we determined risk in society is based on volatility of a benchmark. So when you get into, for example, stocks, well, the high risk means the volatility that you could expect depending on what happens versus the benchmark. If you would buy an ETF that follows basically the. Now, risk in the alternative space is defined a little differently. It's really defined as success or failure. Because if you're building a hotel, if your business model is not done properly or you lose control of your costs, well, obviously you have a bit of an issue, which can impact your portfolio and if you're overly exposed. So what alternatives do if you want to do it properly is that it allows you to remove a certain volatility, which at the end of the day allows you to sit a little more on cash. And in case the market goes down, you have money to average down, and you also have cash in case new opportunities present themselves. So your mindset when you put alternative investments kind of shifts from time is money to cash is king. And there's not many financial institutions in today's age that have that mentality. So if you walk into any financial institution today, they're going to pretty much tell you, oh, you got to invest on the first day because, you know, time is money. But if I look at it the other way, think of it as if you get an inheritance tomorrow morning and you say you want to buy a building, well, you're not going to buy the first building you see at the corner. You're going to do some due diligence. You're going to look at it. You're going to look at geographically what it does. So what alternatives do is it allows you to sit back a little bit and make decisions more of a longer term, and not have that believing, oh, I'm going to miss out on an opportunity because I didn't get in today. So that's the mindset kind of shifts. Obviously, you mentioned that there's I mean, I'm not going to get too technical here. Generates a better alpha, better enhanced return on the risk profile of it over a longer period of term. Studies have shown with CFAs and all that. But in a nutshell, for an average individual, that's what it does, is that you can sit on an opportunity that you can put maybe a smaller amount and sit a little more in cash and wait to see where that opportunity goes. And yeah, like a perfect example is when the stock market, the Dow Jones fell to 18,000. If you had some alternatives in your portfolio and you had a bit of the mindset, let me keep a bit of cash, well, you were able to buy in the Dow at 18,000 and still get it and still have those opportunities. So what it does is that it kind of gives you a nice return over a longer period of time compared to just getting into the traditional asset classes. And like I mentioned, I mean, a lot of companies today are staying longer. I mean, a lot of wealth creation, I can't remember which study it is that I think it was like close to 95% of values created in the private markets because companies are organized in private and staying longer to achieve. Be it, I mean, you look at today on the balance sheet of companies that are public, 90% of their assets are intangible assets, where 40 years ago it was all fixed assets. So what does that mean? Is that you have intangible assets that are IP, patents, trademarks. So what happens is that you try to stay longer private to be able not to show your secret sauce to the public and build your business, and you go public later on. I mean, you look at just examples like Palantir, years, Tesla, I think it was 17, 18 years as well too. So yeah.
So Tommy, how does one find alternative investments? Like, where do you go?
Well, I mean, the easiest alternative investment is real estate. It's part of an alternative investment. I don't like for people that have their principal residency to include it as part of their investment strategy, because your principal residency is where you live, where you maintain your lifestyle. Your kids go to school, and close to your job, proximity, whatever it is. So, but it is an investment to a certain extent. Now, when you have a second home, a third, or a real estate investment, it is an alternative investment. So the easiest alternative investment is actually real estate to get into. Now, once you dive in the alternative space and you're looking at it and saying, well, how do I gain access to something outside of the traditional asset classes? There's not too many financial institutions that do that right now at this stage. Now, when I used to work at PwC, and the whole idea of alternative investments was, there was an article written by PwC saying in the next 40 years, or actually 20 to 40 years, they're expecting alternatives to become mainstream, being a technology and aspect. So the idea is that because technology is going to be getting better, blockchain is going to allow you to be able to transact quicker. Instead of, like, I'll give you a simple example. Instead of buying into a restaurant, you'll be able in the future to buy into a table at a restaurant and get those revenues related to that restaurant. So there's a lot of stuff that's going to be coming out. You'll be finding niche markets. And then, I mean, we could get into more of a discussion, a lengthy discussion, but I would argue that 2019 was the peak growth under this globalized system. And now with the deglobalization that's happening, well, you shouldn't expect to have global growth that we did. That does not mean there won't be growth. There'll be pockets. So what happens is that we're moving from a passive investment strategies where you just buy ETF and the world is just fully globalized, supply chains, no problem. Well, now you're looking at inflation and resilient supply chains, which are going to increase prices. And then you're looking more on active management. So what does that mean? It means that you have to work to find those opportunities where you can make money. You can't just sit back and just buy passive investments. And in a world where that's coming in, well, that's where alternatives come into play, and you see it right now. I mean, there's a lot of, especially in the US, there's a lot of platforms where you can literally go in, qualify yourself that you can purchase these kind of investment opportunities. You can buy them online. Now, most of them are for accredited investors because that's how it works. Obviously, for highly sophisticated investors that can buy, like basically like you buy your Amazon order, well, you can buy investments in that sense. I'm not a big believer in that sense that the industry is going to move. I still believe that finance is a business of trust, and you want to be surrounded by trusted organization and trusted people. I mean, when I look in finance, what's going around and trying to get people to basically do things on their own, I think that's more of trying to reduce liability to the financial organization, saying you did it yourself, so you're at your own risk. We're still in the mindset that we're still going around. We have representatives across Canada. We're trying to educate people what deals to go into. Even if you get super excited about one investment opportunity, not to over diversify, educate in that sense. And yes, technology and AI and all that is going to be able to make it a little more mainstream. Yeah. But to go back to your question, not that many today that are looking at giving to offer investment opportunities to the large market, because one is it's very hard. You have to have a certain education and experience to be able to distribute these kind of investment opportunities. Whereas if you're selling an ETF or you're selling a mutual fund, a Fidelity mutual fund, well, you have a trusted organization that knows how to manage portfolio, and then the role is really to show the investment opportunity. So we're a bit in WhiteHaven, we're a bit in both worlds, that we look at finding those opportunities, helping them structure them, and offering it through our distribution channel. So when you look at that across Canada, there's not that many organizations. So we have a bit of a niche market right now. And Fashion Hero is one example of something that's becoming very successful.
All right. Wonderful. Thanks very much, Tommy, for joining us today.
Pleasure, Mario. Anytime you need me, you know where to find me.
Okay, super. That was Tommy Baltzis, who is CEO of WhiteHaven. I'm Mario Toneguzzi with Business Spotlight. Thanks for joining us today.